Welcome back, traders, to a market update. It is Tuesday morning, or no, actually, technically, it's still Monday, but we're getting there. It's close enough. Anyways, this is going to be a market update on S&P and Nasdaq, and I just want to use this market update to kind of clarify my stance on both of these indices. So here on S&P on the daily chart, now if you listen to my market outlook yesterday, I definitely said that we could take the sell side below these lows and probably retrace somewhere between these two PD arrays, the weekly wick and then this weekly, or technically daily wick right here. We could come in somewhere in between these, and we definitely worked into it today. Now the key is, do we go below this low? No, I don't think we're going to do that. Now we could come back into this daily wick, use it as support, or even this fair value gap, but I do not want to see price go below this swing low. Now what I favor is a bounce either off of this level or even from where we're at to go back into this daily SIBI. Now because we have all these buy side up here, ideally I want to see price trade through this SIBI, use it as inversion, and then go for the buy side above these highs. Can we do it this week? Well, potentially we could. We do have GDP on Thursday and PCE on Friday, so we could have the volatility to actually launch us up above there. But however, I think the low-hanging fruit will just be to trade back into this daily SIBI. If we do start trading above it and we start seeing support, then we can start turning our attention above the buy side up here. But for the short term, I think the low-hanging fruit is going to just be this daily SIBI. I really want to see it bounce back into this level. Moving on to Nasdaq on the daily chart, you can see we have these purple lines. This is going to be that weekly gap I spoke about in my last outlook yesterday. Now I said I didn't want to see closure below here. Well, technically on the weekly it hasn't closed, but on the daily we did close below it. But if you take a look at the daily wick here, this long one, it did close below the weekly gap, but it did not close below 50% of this wick. So this wick could still be used as support. But right now I'm just going to take it away because the next support level would be 50% of this wick. Honestly, I really want to see this as support, as the last line of defense. I don't want to see closure below this 50% of this wick. Now, it's okay if we did close below the purple line on the daily chart. We could get one down candle, one up candle, creating a balanced price range here. We do want bodies to cover gaps in order to rebalance them. And same as S&P, I am looking for price to come back into this SIBI. Now, if you do happen to catch a good trade up here, I would definitely take some off. We do have a lot of confluences here. There is a daily SIBI, an old BISI that could be used as inversion, and we even have a small little volume imbalance here. So a lot of confluences here. However, I do want to see price trade above all these levels and then aim for the previous week high. Because, well, just to follow along with S&P, I do want to see S&P create a new all-time high. Nasdaq could do that. I mean, we do have this high and this lower high, so there is a lot of buy side above here. I think this could just be a false swing, and then later price will want to come up and take the buy side above here. But I think for the short term, definitely aim for this previous SIBI that we had. Now, as always, don't take anything I say as trading advice. These are my opinions and for entertainment purposes only. I could very much be wrong. I've uploaded many market outlooks and have sometimes been wrong, but also sometimes have been right. Now, although it would be interesting to go back and see how often I've been right or wrong, now that I think about it, I may as well go ahead and do that for a future video. So if you want to see that, make sure you like this video and subscribe. Also, I will be continuing my lecture notes on ICT's 2025 lectures, so stay tuned for that as well. But until the next one, safe trading.